Hey, what up, y'all? It's Lance Trading. Today we'll be looking at some of the best options available for dividends in terms of yield. So the highest amount of return you're going to be getting back, as well as dividends that are given monthly. So that's going to compound monthly and go ahead and give you more income in the long term. Just a quick heads up, guys. The websites I'm going to be using is a lot better for dividend tracking. The reason being, the dividends that are shown on Wealthsimple or some websites like Yahoo Finance aren't really updated daily compared to the close prices of stocks as well. So these websites I'm going to be using are pretty accurate in terms of the dividend yields, as well as I'll leave the link from my compound interest calculator for how much your money will become if you compound it, as well as what initial $10,000 investment will look like in the future. Alright, for the first dividend stock I have for you guys is Split Corp, Dividend Growth Split Corp. DGS is the ticker symbol, and they're currently offering a dividend of 18.15%. So pretty insane dividend. They also offer this dividend monthly, but this is a Split Corp, so I'll just quickly explain what that is. Basically, a Split Corp requires a certain NAV in order for them to give the dividend, and they don't give the dividend every month. So just keep that in mind. When the market is doing well, usually that NAV is really high up, and then they offer that dividend monthly. There are safer options as opposed to this, which offer almost a similar dividend but a little bit less, and they're less risky. I'll go ahead and discuss those, but this is currently one of the higher dividends. So if you want those high risk, high reward, this is the play for you. So if you just go ahead and look at their dividend history, we can see that they gave a dividend this month as well, as that's going to be 10 cents per share, and their current shares is around $6.61. Before, this was even at $5. So if you were getting at $5, you were getting a much better dividend, over 20%. So that was really nice. But as you can see from the history, they have missed some dividend months, and this was kind of because of the COVID market crash, and their NAV went down. But in 2019, they almost hit every single month. So that's really nice to see. Usually when the market is doing really having a good bull run, they don't miss any dividend, and it's a really high dividend for that reason. So let's go ahead and look at how this compounds and what an initial investment of $10,000 would look like in 20 years, 30 years from now. So they currently offer a dividend of 18.15%. That would be your interest rate, and that would be given yearly. And we can go ahead and put the time period as 20. And since they offer the dividend every month, this is going to be compounding. Interval is going to be monthly. So that's really nice, as opposed to the interval that's quarterly. Monthly is going to be increasing your compound. So let's go ahead and just look at what this initial investment would look like without adding any regular contributions or depositing any more money, as opposed to the $10,000 that you initially invested. So if you go ahead and calculate this, you can see that the $10,000 after 20 years becomes $367. So it becomes 36 times what your initial investment was. If the dividend from DGS you get every month, there are going to be a couple months that you miss it because of this dividend being really high up. So keep that in mind. But if it is given every single month, this is how much you will be at. And if you go ahead and look at it after 30 years, we can see that it's going to be, you would basically be a millionaire. So after a couple of years, it starts going crazy. You can see that from year 29 to year 30, you basically got 60K in terms of dividends. So the more money you have, the better it is, as well as with time, it increases. So that's why it's always good to invest at a young age. As you grow up, that's money is being compounded, and the rate of increase is a lot higher. So if you just do, for example, 40 years from 2 million, how much does it become? It goes towards 13 million. So pretty insane. By the time, if you start at 20 years old and you start investing at 60, you could have 13 million. So next I'll just go over towards like some of the safer ones, which offer almost every single month, because this is DGS is one of those split corps that misses some months, but the next couple options are actually very safe. All right, the next one I have for you guys is Dividend 15 Split Corp. So this is a Dividend Split Corp as well, and their NAV is actually a lot higher than DGS, and they've actually only missed their dividend only 4 times, and that was during 2020 because of the COVID pandemic, and they haven't missed any other time since their inception in the early 2000s. Even during the financial crisis in 2008, they still gave the dividend. So that was really nice to see. They showed that they actually do pretty well during a bull market, bear market. So that's really nice to see, and this is something that's really stable, and you can probably expect this every single month. So with the exception of a couple of months when we hit a market crashes. So they do give a dividend of 15%, almost 15%. So that's really nice. And as you can see, like the way dividends work is when the stock price goes up, the dividend yield also goes down. But this is also given monthly, and this is really nice. And their price has also been increasing, their stock price. I bought this stock at around $6.95 and currently it's at $8. So like this has been really one of my better growth stocks, even though this is only a dividend price for me. So let's just go ahead and see how much a $10,000 investment would look like. So after 30 years, let's go ahead and just see what DFN would look like. You can see that it would be around $852,000. Pretty insane, $10,000 investment. It becomes almost that 1 million mark, and that's really nice to see. And since it's being compounded, that's really good. And this is almost a stable amount. You can maybe expect around a little bit less because they would most likely. So since in 10 years there was only 4 months that I missed, I would say you can maybe expect it just a bit less, but around 800K for sure after 30 years. So that's really nice. You're compounding that 10,000. You're just playing with 10,000. This is not. Let's say you put 100,000 after 30 years. Or 20,000, you know, like that would be 8.5 million. So it's pretty insane. This is just initial investment of 10,000. You can work that in, get that in a couple months of just working. So pretty insane. Let's go ahead and discuss the next option. Okay, guys. So in terms of DFN, basically what they do is it's a corporation that compiles up the portfolio of the 15 dividend high yielding companies, Canadian companies, and then they offer this within their DFN as in and their preferred share as well as their class share. So if we go ahead and look at what type of companies they hold, we can go ahead and just see that. I believe it should be right here. This is their history right here. Yeah. So we have Bank of Montreal, Bank of Nova Scotia, so most of the big banks, as well as BCE. I believe they also have Enbridge in there, and some of the best financial companies, as well as TELUS in there. So they hold some of the big high-yielding dividend stocks that are available within Canadian companies. And instead of you getting around 7 to 6 or 8% dividends from one of these individually, if that's a pretty good modest amount, but instead of getting that, you get around 10 plus. So that's really nice. And in terms of how they get this, they basically use covered calls as well as leverage, and they've been really successful in this, in the sense that they've been consistent with their dividends, and they haven't run out of money or anything like that. And this is a pretty safe play in the sense that it hasn't. They usually go ahead and reinvest their money back into the company, and they haven't run out of money in any sense like that. In terms of the NAV, you can see they're at 17 right now. That's a lot better, and that's pretty good compared to what they're supposed to be at 15. And in the sense that you can expect this for a couple months, and I don't see this dividend going away anyway towards 2021 unless we see a big market crash that happens because of inflation concerns. So anyways, this has been a really successful play for me. I'm currently up 20% on this in terms of the stock itself, and in terms of dividends I'm getting that monthly, so that's really been nice for me. Alright guys, so next up we have the Brompton funds. They currently have a lot of split funds as well, and these are some of the better split funds as well. So if you could just go ahead and look at their split corps, they have a couple of them, and they're actually very consistent in the sense that most of them are actually been giving them and haven't missed any dates. So the one we're going to be actually talking about, so if you go ahead and invest in Global Dividend Growth as well as Brompton's Banc Corp, SPC, and GDV, these are very, very safe dividends. They almost offer it every time, and their dividends are actually lower in the sense that they're 8.94 as well as 9.91, but they've been very consistent, and that's really nice to see. But if the one we're going to be talking about today is the Life and Bank Split Corp. So if you just go ahead and click it, so at the bottom you can actually see the disclaimer here that you need actually a unit NAV of at least $15 or $15, yeah. But if you go ahead and look at their current NAV, you can see their unit NAV is almost 19, so a lot higher than DFN. And this is actually a really stable fund, and in the last 10 years it actually hasn't missed anything. Even during pandemic, it was still giving us dividends. So this is a really stable play, and definitely would look into this. It's a little bit more pricey as compared to DFN, but it's very consistent and it's been a really good winner. So yeah, so it's really nice to see. And this has also been growing at a good pace. So before, when I was looking at this, it was around $8. Now it's $8.95. So now really nice to see. In terms of what they're invested in, they also have some of the biggest financial institutions. So Financial Corp, National Bank of Canada, Manulife Financial Corp, Bank of Montreal. So they're very similar to the DFN in that sense, and they invest in high yielding Canadian companies as well as in order to achieve the dividends that they give. Alright, the next option I have for you guys is this is a US option. So if you're looking for one of those US options, this is Cornerstone Strategic Value Fund, and this is a really consistent fund, and they also offer the dividend monthly, so that helps with compounding. And this is a dividend yield of 16.44% currently, so that's really nice. And they this has been really consistent, and they don't tend to income funds usually don't miss any. It's not like split Corp, so dividends are very stable, and they've also been this is looking really clean in terms of their price as well. Something to do keep in mind is though, with this income fund, is that their dividend has been decreasing as their price decreases. So income funds are in that sense the same, but this is a really nice yield currently. So go ahead and look into this. Alright guys, the next dividend I have for you is Split Corp. This, I know a lot of people are fan of Enbridge, and this is a Split Corp that only focuses on Enbridge. So their only holding is Enbridge. So if you want to get exposure to Enbridge, instead of buying the Enbridge stock, you can go ahead and buy ETFs, which gives you a higher yield than Enbridge does, even though Enbridge yield is pretty high. Let's go ahead and just look at this. They currently offer a yield of 11.76%, and they also give the dividend monthly as opposed to Enbridge, which gives it quarterly. If you go ahead and look at their dividend, you can see that's been 0.13 every month, and it's really consistent in the sense that you've always received this dividend. If you go all the way down to 2020, they have given it, they haven't missed a dividend, so it's a very consistent dividend. There's no risk involved as well. So since its inception, it's been really consistent, and it's a really nice 11% yield compared to the yield you get from Enbridge. I believe it's around 7%, I think. Yeah, 7.15%. So, and also it's offered quarterly, so this is a lot better option compared to Enbridge if you are looking to buy Enbridge. So just a quick calculation on this, we can see that let's go ahead and just look at how much your initial $10,000 each Split Corp would be. It would be around 334k, so that's pretty insane. In 30 years, only the investment of $10,000 becomes 34 times your initial investment. So really nice. It definitely has potential to become a 100 bagger in a couple of years. Let's go ahead and just put 50 years as an example. So if you're 20, if you start investing at this around 20s, and then in your 70s, how much will this become? Your initial $10,000 investment will become almost $5 million. So definitely millionaire at that point. The more you add, obviously, the better it is. But initial $10,000 without any extra contributions is going to be a really good amount. And this is a lot more than what savings accounts as well as some of the RRSPs are giving. So if there's anyone looking for a US stock that gives a really high dividend, so the one I have for you guys is Shell Midstream Partners. So Shell, and they currently offer a dividend almost at 12%, 11.82%. This is really nice if you're a US investor. There's not that many options as a US investor. I've seen that. But there are a couple options for sure, but there are limited options as opposed to the Split Corps that we get in Canada. But anyways, this is a really consistent play, and they give you a good dividend annually, and they have also been increasing the dividends from 2019 to where's 2021, which is currently at 46 cents per share. So really nice play if you are in the US and you want to go ahead and look into a US stock like Shell. In terms of Canadian investors, you want to be careful with holding dividend stocks because you do get taxed even on US stocks a lot more. It is safe to actually hold them in your TFSA as well as our retirement savings plan, but you want to be careful if you're holding them in many personal accounts because you will be getting taxed more on US investments. Alright guys, thank you for watching. In the future video, I'll go ahead and just look at some of the best dividend stocks available, as well as the best REITs and the best income funds that are available, and you can buy in order to get and maximize the amount of passive income that you receive. But this has been wonderful. Have a wonderful rest of your day, guys, and I'll see you in the next one.